Okay, so this is trend changes with breaking structure, market structure shifts, and changes of character. Okay, so this is an introduction to the concepts of breaking structure, which is BOS, market structure shift, which is MSS, and change of character, which is capital CH, small o, and then a capital CH, which is change of character. Now, to use these in the context of trading, you're going to be able to understand when the market shifts into from bearish to bullish and bullish to bearish. This will give you an overview of how these concepts help to identify and help you find responding market trends and changes before retail traders do. Okay, so identifying market structure shifts. Okay, see this? Why would this not be a shift? Okay, because this here was where this was created, so this did not take this and not go below it, did it? So that wouldn't have counted. Now, what happened was it came up and made a higher high, but this low here was this came up and failed to come in to make a new high. So this now became where the area would be where the market would shift. If there was a fall from here and a break of structure, then the market would shift from bullish to bearish. Okay, so market structure shifts, MSS, or changes of character, they're both the same thing, are involved in changes in patterns for highs and lows in a trend. The market structure shift or change of character can indicate a shift from an uptrend to a downtrend. I've just explained how. It needs to take a current low out, so if this doesn't create a new high, okay, then like it did here, then this would be where the market would shift bearish. Okay, so we've just understood what MSS and CHoCH is. This is BOS, breaker structure. Similar kind of idea. So the first time that the market changes and it shifts is a market structure shift or a change of character. The second time it does it, this is a breaker structure. So a full break, like not just a shift, but a break. So your market structure shift would be further up here. Then you would have a breaker structure and another breaker structure. As you can clearly see, this downtrend breaks structure from these highs and creates new lower lows and new lower highs, as you can see. But this over here, broken there, this was more of a sweep. Okay, so understanding that this was a breaker structure and this was more of a sweep means that you do not enter the trade every time you see one. It just means that the price has broken through a previous support or resistance level, and this obviously is signaling to you from a market shift into one of these. It means that the trend has actually started to take full control of this. So the bears have taken control or the bulls have taken control. Okay, so strategies for responding to trend changes. Strategies for adjusting trend positions in response to breaker structures and realigning with new trend direction and updating trend setups. What does that mean? Now, when you see the market structure shift, okay, you have one here, bullish. So what you're looking for is a pullback and then it's going to continue higher. But you don't always take these into play. This could be where it's just ranged for a few days and it's come in. So what I'm looking for at this point here is I can see clearly that it's been printing fair value gaps. This one was disrespected, but this one wasn't disrespected. This one was hit. And when it was hit, it fell and collapsed, creating a new break of structure after the market structure shift. Then what it does then is it comes down, makes new structure and comes back up, back into the fair value gap again, and then collapses again further down, creating a new breaker structure. So what you're looking at that point in time is if we have another low or we measure this entirely, you'll learn this in the supply and demand course more. We have a premium area where short has come into play, and we have a discount area where the bulls come into play. The nearer we get to the discount area from a short, the higher chance of it reversing. I'll say it again, the higher chance of it reversing as we get closer to the bullish side for the discount area. The same applies for the premium area. The higher we go up the market towards the premium area where the short started shorting, the higher chance of it reversing. So at that point, you should be looking for targets. So my target, if I would have got in at this point here, over these candles here, would have been, once I seen the break, I would have looked for the fair value gap. Then I would have taken this area first. As you can see clearly, this top just came in roughly around this area here. It may have come back up and come back down again, but that, for me, this area here would have been, and I would have been taking full profit. So it gives you clear indications of what is acceptable and controllable and what's not in your control. The closer you go in a short to the discount area, the higher the risk is of you having it reverse. And the higher you go into the premium area where people short all the time, that you're risking your long at that position for that to be able to reverse and come back on you. You've got to be able to utilize these signals. These help you identify potential new trading opportunities and actually help you as well following the trends. Okay, risk management and seeking confirmation. Once you see a break of structure or a market structure shift, your idea should be your stop loss will be one candle below the entry candle that you enter. So if I entered in the market in this candle here, my stop would be underneath this. Okay, underneath that one there. Okay, so making sure that you revise stop losses and seeking confirmation as well is crucial to putting up your win rate so that you will win more than you will lose if you seek confirmation and make sure that if you've got a trade that's going away from you and it's coming away and you're in profit, your idea should be to move your stop loss up every time there's a new pivot in the market. You put your stop loss underneath it. And then as you get closer to your target, you move your stop loss up to start with. If you're not sure and you are a bit wary of being in the market too long, stop loss is your friend. Yeah, I've taught all the moderators this when they came in and they weren't using it. Stop loss is your friend, and if you don't use it, you will lose your account. It's a fact. So making sure you seek confirmation to employ like different indicators or anything if you want to, or you could just use our indicator that we give at the end of each course. There's a different indicator or the similar indicator and tools that you can use for that specific course in the indicators. Okay, so false signals. This one here was a false signal. That's the reason why I kept this one on. This told you that there was a market structure shift coming to the bullish side, but this was probably like the breaker structure here, fake out, so a false signal. So you've got to be careful of that. And you've also got to be able to control your emotions. Sticking to a disciplined trading strategy that I give to every single one of these people that do this course, complete it. At the end of it, you have a trading plan that you follow and a strategy that stops or reduces the emotional control down. So it stops you from FOMOing in or panicking trading. So effective strategies and identifying stuff helps you to adapt with trend changes. Using the breaker structure, the microstructure shift, the market structure shift, and change of character is a crucial aspect of successful trading. It involves a mixture of technical analysis, disciplined strategies, and understanding the market fundamentals. When you have all these in place, you can enhance the ability to spot trend changes, and you should be able to be a part of like a comprehensive approach to including how you use your risk and emotional discipline. So, trend changes. I've explained now briefly before we go into each module for the breaker structure and the market structure shift and the change of characters. We're going to go into them in a bit more depth now, but this is just an outline of what they are and how we're going to use them in our trading plans. See you on the next video.